Hi, I'm Robert Michaud. I'm the Chief Investment Officer of New Frontier Advisors, and we are a firm that was founded based on a research idea for doing portfolio optimization better, building more diversified portfolio, and managing the risk and return trade-off for an uncertain future. And then we built technology that literally examines thousands of future scenarios and builds a portfolio that's most robust, most diversified, given that you don't know what the right answer is for how to build a portfolio going forward. And so then about 20 years ago, ETFs became available in a great variety, quality, and quantity so that we could build a institutional quality portfolio that was available for financial advisors and their clients. And we were thrilled to be a part of this revolution of bringing a next generation of investment advice to the investment industry. What's interesting about this and every market environment is all of the future unknowns, whether it's interest rates, geopolitics, or just risks around the world. The way that you need to invest is never fixed in stone. And so you need to be able to measure the risk and the return trade-off, what the return on risk-free assets is versus maybe the premium for investing in some of the more unknown parts of the world is, and to be able to build a portfolio for that. So I think today we still have some of these challenges. Interest rates are much higher, at least on the low end of the curve. And to be able to figure out what does that mean for the rest of your portfolio, how do you think about allocating to something that's safe and having a high return now versus something that's risky and potentially will have a greater return in the future, is a challenge to put together into a portfolio. And so when you think about how a conservative investor wants to invest and what portfolio is appropriate for them, that's again a very different answer than how an aggressive investor may want to invest, because they may be more willing to accept some of these risks. So I do like being able to think about how much do you want to invest, say, in cash-like securities, which have a very fixed return, very known risk associated with them, and then where else do you want to take risks in your portfolio? So certainly one of the interesting things now is balancing some of these trade-offs between aggressive growth technology stocks, which are certainly priced very high, but maybe also have some growth potential going forward, compared to things that are depressed asset prices that are more traditional sources of value, and building that into your portfolio, diversifying these risks, being very careful because there are certainly a lot of risks out there and you don't want to be overexposed to anyone, is sort of the main challenge, I think, right now in building a portfolio. I think investors are always a little bit overconfident of one major story. And so to me, that corresponds to betting on a single scenario. And whatever that scenario is almost doesn't matter because the market is aware of it. And if you're overconfident of it, then you're ignoring other risks. So I think this is an important feature of a more sophisticated way of thinking about investing. Instead of thinking about one scenario, think about all of the unknowns. Think about some way to build a portfolio for thousands of futures that can possibly be anticipated right now, and you want to have a robust portfolio given that no one knows the future. The foundation of our asset management was really tied in with ETFs right from the start. So 20 years ago is when ETFs first became available in enough quantity, quality, and variety for us to be able to build a true institutional quality multi-asset portfolio for a range of investment goals and risks. And so we keep coming back to stay in front of that. Not every asset class has been solved. Not every way of getting exposure to a risk premium and diversifying portfolio risk has been figured out. And as time goes on, we keep coming back to see the new innovations in ETFs.